Allow me to say good morning because it is still early in the morning. I will be doing question 9 from the question bank, and this is once again a long question out of 50 marks that we also need to put our attention into in part preparation of any assessment. So now we are reading on this question, which is called Junior Sports LTD. And before I read, I just want to analyze, look at the overview of the question. The question is divided into divisions. We can say that there is a tennis division. And we can also see that there is gymnastic division. And after, we can also take into account that there is another division called rugby division before we even go to the requirements. So now after that, we can go and read what we are required to do, knowing that there are 3 divisions, meaning when we read our information, we need to read it per division. Then after, we answer information that relate to that division. So now in the first requirement, it says calculate the budgeted, take note, not the actual, the budgeted break-even sales value of the tennis division, meaning it's only for the tennis division, meaning we only need information for the tennis division for us to respond in this question for July 2015, and ignore the possibility of discontinuing the sales of the Wilson tennis rackets. So meaning there's a possibility or there's an opportunity that this company can discontinue with the sale of this product. But they say in the calculation of the budgeted break-even point under Roman figure 1, we need to be ignorant of that possibility. And now we go to Roman figure 2 of question A. We are required to calculate the budgeted, take note once again, is the budgeted break-even sales value. And previously it was also sales value, not just sales units. After we get to the sales units, we have to multiply that by the selling price to get to the break-even sales value of the tennis division. Still again is for the same first division for July, assuming that the management decided to discontinue the production of Wilson tennis rackets. So now after they discontinue, how much will be the break-even units, in fact a term that by the selling price would become break-even sales value. Then after we'll also look at that. Third bullet point, we are required to advise the management whether it will be a good idea for business to discontinue the sale of the Wilson tennis rackets or not. So now obviously we have to calculate the marginal profit or the profit before they discontinue. Then after we calculate the profit after they have discontinued. Then after we do the comparison and we make our decision on that. They say support your answer with appropriate calculations and comments regarding the different options. Also consider non-financial factors. I will just briefly explain the theory. I will not go in details in terms of writing it down because it's just the theory. As long as I will just brief you in terms of what is happening, more especially regarding the workings. I will do the workings in details, and advising either to discontinue or to continue. It will just be easy after the calculations have been presented well. Then we have number B of the question, and number B, we are required to prepare a statement of reconciliation where we reconcile the budgeted profit to the actual profit in respect of the gymnastic division for June 2015 in such details as permitted by the information provided to us. They say to us that we needn't calculate any material mix variance or material yield variance, and they say assume that the combined material mix variance in total was 16,000 rands favorable, consisting of 32,000 rands and of material Y, and 16,000 rands for material Z. And after they say that the combined material yield was 33,200. So now when it comes to the usage of material, we already have the variance for material usage, because yield and mix, it gave us the usage. Then after they say your answer should clearly indicate the relationship between the following: budget, standard, actual, material purchase variance, material usage variance, and all other applicable variance. Then we have number C, where we are required to provide the possible reasons as into why the following can be, or why the reason for the following variances, which is material price variance and the total mix variance. For this one, I will not go just theory. You'll read that by yourself. Why will this be a reason? Where it's because of the price, where the price will obviously increase from the suppliers, or maybe we just did not look for the better options to buy inventory, where we can buy material at a better price if the variance is unfavorable regarding the price of material. Then we go to number D. It says calculate the total budgeted contribution of the rapid division for July based on the optimum product mix. So definitely there is a limiting factor here. So now we'll be calculating the number of units that must be manufactured for each product, considering the limiting factor, which I don't know what that limiting factor will be. So now at least we have a refresh of how the question look like. Don't forget that requirement number A, we are required to calculate the budgeted break-even sales value, and while there are two products being manufactured before they discontinue with the Wilson tennis rackets. Then number B, we are calculating the break-even point budgeted, and that should be sales value for the tennis division after they decided to discontinue with the production of the Wilson tennis rackets. So now we just have to refresh on that, because it's the first two questions that we'll be responding to. So we are focusing mainly on there. And I also want just to recap on this. We are doing the reconciliation under number B for the gymnastic division, which is the second division. And the last question, we are calculating the contribution based on the rapid division. So now we can see that the questions are specifically for a specific division. So now also for us, we'll read information on a divisional basis. So let us go to the first division that is provided to us, which is the tennis division. And a question when structured in division, honestly, it becomes very easy to respond, or it's well structured to analyze for students. They say Junior Sports LTD has numerous divisions, and we have already seen that there are numerous divisions, each specializing in specific sports codes. The financial manager of Junior Sports LTD recently resigned, and the management team needs the advice of the cost accountant for important business decisions that they face. So we have the tennis division, as we have already seen that the tennis division currently sells two types of products. Okay, they have two types of products of tennis rackets for children, which is a Wilson racket and a Babolat racket. So these are their two products, product 1 and product 2. The Babolat racket are becoming increasingly popular. The sales forecast for July 2015 of the tennis division, based on 400 Babolat rackets and 200 Wilson rackets, are as follows. So that means the information that we will be seeing below, it was based on the sale of the 400 and also on the sale of the 200. Don't forget, the minute you get to your budgeted information, and you know that you are required perhaps to calculate your break-even point for two products, you know that there must be a production mix. So we need to know the production mix for the tennis division. So my calculations will go in the order of the division, or in the naming of the division, according to the names of the divisions. So I will have here tennis division. So now all that relates to tennis division will be recorded here. So I'll be recording production mix for the tennis division. And we have two products, Barbolat. We have Barbolat. Then after we have Rackets, just to confirm the spelling. Or we have Wilson Racket, which is the second product, is Wilson. Then we say that, or they've told us that they budget to manufacture 400 and 200 units. So now when we're calculating our product mix, we divide here by 200, meaning we look for the common denominator. And also we divide by 200. Normally, common denominator is not normally, is the number that goes to both of the figures, the highest number. So that in this case, this will cancel this, this will cancel this. In other words, 400 divided by 200 will give us 2, and this will be 1. 200 divided by 200 will give us 1. So now meaning our production mix will be 2:1. So we have our product mix, which will assist us in the calculation of break-even point. We are then provided with the selling price per unit, and the selling price per unit is 55.50 and 350 for Wilson. And we have our variable cost and our variable cost per unit already given to us. And if they've given us our variable cost, it makes things easy, because selling price per unit minus variable cost per unit, this will give us contribution per unit. So immediately from here, assuming that there's no other variable cost, I can calculate my contribution per unit. So now let me calculate my contribution per unit. I'm assuming that there is no other information. Contribution per unit. So this contribution will be for the two products, which is Barbolat and Wilson product. Wilson product. Then I have the selling price, which is per unit. Then I say my selling price is 550. And my selling price is 350 for the second product. 350. Then I subtract my variable cost. Preferable, don't do this in the exam, because there might be other cost variable that are not included there. So now you still have to analyze the information. However, I will read everything. If then there are other variable costs that we need to account, therefore now we have to erase this and account for this variable cost. So now this will be 220 and 400 of the variable cost. Then now in calculating our contribution, we have 550 minus the variable cost. Then this gives us a contribution per unit of 150. Remember, contribution is sales minus all the variable cost, variable manufacturing cost and variable non-manufacturing cost. Then after we have 350 minus 220, and this will give us 130. And don't forget that contribution is the portion of sales which is used to cover fixed cost, contribution per unit. A contribution is the portion of sales that is used to cover a fixed cost. Remember, we had our sales, and our sales price per unit was 550. And if we remove 400, which is the variable cost, the remainder out of the selling price will be 150. And this 150 will be used to cover fixed cost. That is why when the contribution is equal to fixed cost, the company will be at the break-even point. Whenever your contribution in total is equal to the total fixed cost, the company is at the break-even point. And also that is why when you are calculating our break-even point, we say total fixed cost divided by contribution per unit, because contribution is the portion of the selling price that is used to cover fixed cost, because we have deducted the variable portion out of the selling price. So now we have our contribution. Then after we say term this by a production mix. We can multiply this by the production mix, because we already know that we are required to calculate the break-even point. And whenever you calculate the break-even point for two products, you need to multiply by the production mix. So now this will be 300 and this will be 130 rands. Therefore now we get to our weighted contribution per unit. Weighted contribution per unit. So now this will be our weighted contribution per unit, and I want to hold it here so far. I don't want to go further, because there might be perhaps other variable costs that I need to take them into account. This was 130, or this was 150, and this was 130. So now I just need to take into account such. So we proceed now in that same note. In the same note, it says common, which is indirect fixed cost of these two brackets for June in the year 2015. Remember, the information provided to us below, which is this information, was the forecast for July. They said the sales forecast for July 2015. So now they are giving us the fixed cost for June. So now this fixed cost is not the budgeted fixed cost for July, but is the fixed cost for June, meaning we still need to know the estimate for the month of July. Then it says the common fixed cost can only be avoided if neither, take note of that, if neither of the two rackets types are sold, as they are related costs to common facilities. So now that means as long as the company manufactures one of the products, they will always incur the 35,200 of the fixed cost, which further means that, as we have seen, that the company wants to discontinue the production of the product Wilson. So now meaning even if the company will discontinue, however, they will still incur the fixed cost of 35,200 rands. So that is something important to take into consideration. So now they say the common fixed cost can only be avoided if neither of the two rackets type are sold, as they are related costs to the common facilities. And it says it is expected that the fixed cost will increase by 7.5% in July 2015. So now remember, this is our month that we are budgeting, which is July 2015. So now they say the fixed cost of June are expected to increase by 7.5%, and that becomes our estimate for the month of July in the year 2015. So now let us calculate our budgeted fixed cost. Then we calculate our budgeted fixed cost. We have budgeted fixed cost, and my budgeted fixed cost will be 35,200 times this by 1.075, because the expected increase is 7.5%. The expected increase is 7.5%. That is 7.5%. Remember, this is 100% plus 7.5%. It is 107.5%. So that is the 107.5%. So now if you get that, we just divide that by 100 to get to a decimal 1.075. So that 1.075 is coming exactly from there. If you want, you can say times by 107%. So now that was 35,200, times that by 1.075. So now that means it will be times 35,200 in order for us to get to the budgeted fixed cost, which is 37,840 budgeted for the month of July in the year 2015. So now we have calculated our weighted average for each unit, and we have our fixed cost, assuming there is no other fixed cost. So now it means we can calculate our weighted contribution, per batch. And our weighted contribution per batch will be 300 plus 130. It will give us an amount of 430. This is the amount that we use in the calculation of the break-even point. So now let me just complete all the information related to the tennis division so that I see if there is no other costs that need to be taken into account. Management of the tennis division is considering discontinuation of the Wilson racket. So they want to discontinue. And it says if they, take note, if they discontinue, they will increase, or the sales, if they discontinue the Wilson rackets, the forecast sales for the Babolat racket for July 2015 will increase to 600 units. So now they expect that when they discontinue the production and the sale of this product, the sales of the Babolat racket will increase to 600, meaning they will increase by the difference of 400 minus 600, meaning they will increase by 200 to 600 units. Then after, they say the Babolat rackets will then be sold at 10% discount, meaning now the selling price will decrease by 10%. I want to hold this sentence so that I read it after I'm done with the analysis. So let me just keep this as highlighted with a different color, where they said if, what will happen if this happens. So this last part, I want to keep it for the next analysis. Let me hold it because this is for the discontinuation of the product. So far, I want to read before the discontinuation because I am calculating the break-even point, ignoring the possibility to discontinue the sale. So now I don't want to be confused with the information relating to the discontinuation of the Wilson product because I am ignoring that in the first requirement. So now from this point, I can calculate my break-even sales for the two products. So now we have already calculated the fixed cost for the month of July, and we have already calculated the weighted contribution per batch as 430. So now from here, I can calculate my break-even sales units and sales value. So this was requirement number A, Roman figure 1, break-even sales value. My break-even sales value, I know that it is fixed cost, all the fixed cost. Divide this by contribution per unit. Divide this by contribution per unit. And my fixed cost is given as 37,840. That will be working 1. Divide this by 430, which I have done that in working 1, meaning that will just be named as my working 1, all of that, or I can have all of that as working 1. If you want, you can split that where there is working 1 and this becomes working 2, product mix being working 1 and this being working 2. I think that will be the good way. So let me just use that as working number 2, not working number 1. The way you number your working is cannot be structured, but as long you can give a right direction to the examiner. So now we have 37,840. We divide this by 430 and it gives us 88 units per batch. This gives us 88 units per batch. So now this is the break-even point per batch. We need it for each unit. So now we have 2 units or for each product. Barbolat. So now we need it for Barbolat. Barbolat will be 88 times this by production mix. Always don't forget the production mix for Barbolat was 400 divided by 200. It gave us 2. So we multiply that by 2. Remember, 2 will be under working number 2. I have to give that direction. So now it will be 88 times by 2. Then it gives me 176 units. Don't forget to multiply this by the selling price, because we are calculating break-even value. Term this by 550, which is the selling price is the 550 rands. Remember that the selling price was 550. We had that as our selling price. Then after we calculate the break-even units for the Wilson product, which is 88 times that by 1. Remember that 1 come from working 2, and we close there. It will give us the same 88, and we multiply this by the selling price, which is 350. Then after we get to the sales value, 176 times by 550. This will give us 96,000 rands. Then after we have 350 times that by 88, and it gives me 30,800 plus 96,000 rands, and this gives me a total of the break-even value as 126,800. Don't forget also to divide the units, or to give the total of the units. 176 of the break-even point for Papalot plus 88 for the Wilson, that is 264 units combined. So now this will be the answer to requirement 1, where we were required to calculate the break-even point, and that break-even point was in value, taking into account the fact that the company is not discontinuing with the production of Wilson, or ignoring the discontinuation of the Wilson product. So now I have responded to the first question, or the first requirement. Therefore now in the second requirement, they said I must calculate the budgeted break-even sales value of the Tennis division for July 2015, assuming that management has decided to discontinue the production of the Wilson product. So now if they discontinue, I need to go and read on the information that relates to the discontinuation of this product. Hence, I decided previously not to read more in the one that I have underlined here blue, which is red now, and there's no underlining. I decided now not to read this because this information relates to the discontinuation of product Wilson. So now, meaning now that we are required to calculate the break-even point after they discontinue, therefore now I need to take this into consideration. They said if the company discontinues with the Wilson rackets, the sales of the Babolat product will increase to 600 units. However, the Babolat selling price will decrease by 10%, or the product will be sold at a discount of 10%. Meaning now the selling price of 550, which was the selling price of Babolat, will decrease by 10%. So now we need to reduce that by 10%, and we know that the sales will go up by 600. However, the sales, they don't have any relation regarding the calculation of the break-even point. It will be needed a bit later on. Remember, the fixed cost remain the same. As long as the company still manufactures this product, fixed cost will still be that 35,200 plus the 7.5%, which is 37,840 budgeted for the month of July. Don't forget that. So now what we need to do, just to recap on that, we need to reduce our selling price, which is 550, by 10%, because they said the product Bapolot will be sold at a 10% discount. So now we need to reduce that, and our variable cost still remain the same. There was no change in the variable cost despite the discontinuation of the product Wilson. So now we have to calculate the selling price. So this will be again my workings calculation. This will be working number 4, which is calculation of selling price for Bapolot product. The selling price will be 550 times this by 90%, because a discount of 10%, meaning the product will be sold at 90%. It will be 550 times this by 90%, which is 0.9. So the selling price will be 495 after they discontinue. Remember, if you want, you can say 550 times by 10%, which is 0.1, is equal to, you get 55. Then you say minus 550, you get the same 495. It doesn't matter which way you use. So the selling price will be 495. So now in calculating the break-even point, we still keep the same basics. Fixed cost divided by contribution. Our fixed cost remain the same at that 37,840. Nothing has changed. However, now our variable cost, our contribution will definitely change, because our contribution was previously calculated as 150, which was 550 minus 400. But now we no longer have the same price of 550, because the company is selling this product at 495. So now we have to change our selling price, then after we minus the same variable cost. So that's what we'll be doing now in calculating the new contribution for product Bapolot after the discontinuation of product Wilson. So now we're calculating our contribution per unit, and our contribution per unit will be sales per unit, which is selling price per unit, which is calculated at 499. Then after we have our variable cost. Our variable cost remain the same despite the discontinuation of product Wilson. So now we'll have the new break-even point, which is 495 minus 400. Therefore, now we can see that our contribution is 95 rand. Then we'll have our contribution per unit. Remember, we don't multiply by the product mix, because there is only one product. There is no mix of products. So we only calculate that. So now from here we can respond to the question, where now we are responding to Roman figure 2. Roman figure 2, we are calculating break-even sales units. Break-even sales units and in value, which is break-even sales value. That is equal to fixed cost, which remained the same, and we divide this by 95 rand. So we divide this by contribution per unit. Still a formula first. We divide this by contribution per unit, and our fixed cost remain the same, 37,840. our contribution changed to 95 rand. Then our break-even units will definitely change. 37,840. Divide this by 95. It gives me 3,000 or 398. It gives me the different amount, 0.32, and this will be equivalent to 398, rounding down units. Then after now we need our break-even point in value, not just in units. That is in units. Therefore now we continue on that same. We will have to say now selling price of 495 times that by 398. Then we get to the break-even value. Times that by 495, which is the selling price. After multiplying that by 495, we get to 197,166. 197,166. So now this will be our sales, our break-even value, our break-even sales value for the Bambalot product after the discontinuation of the Wilson product. Then we continue on that same note to the third bullet point. To the third bullet point under number A. Number A, we are to advise the management as into whether it will be a good idea for business or a good decision for business to discontinue the sale of the Wilson tennis racket or not. Assume that the respective forecast of sales are accurate and support your answer with appropriate calculations. So what we need to know is the profit, which is the marginal profit before the company discontinued. Remember, in this case, we don't have to take into account fixed cost because fixed cost remained the same even after the company has discontinued. If fixed cost had changed because of discontinuation, therefore now we'll have to take them into account in the calculation to make the decision as into either the company should continue or discontinue with the sale of this product. So in this case, we will not take into account fixed cost. The only thing that we need to consider is only to calculate our contribution. So now we have to say before they discontinue, if you want, however you want it, before, or let us just calculate contribution first, before. Contribution when producing all products. When they are producing all products, we will have Bambalot and the Wilson product. We had our contribution per unit. Remember, this was already calculated. I don't have to recalculate it again. Our contribution per unit was 150 and here it was 130. So we have to term this by the projected sales or estimated sales, which was 400 and here it was 200. We want to know how much will be or how much was supposed to be the marginal profit if they are selling both products. That will be 150 times that by 400, meaning the company would have made a marginal profit of 60,000 for the product Bambalot. And we have to say 130 times by 200. We get to know that the company would have made a contribution of 26,000, a portion that would have covered our fixed cost. Then we get to our total contribution here. We get to our total contribution. Then after we say total contribution, per product. Then we have our total contribution for both products. Our total contribution for both products will be 60,000 plus 26,000, and this will give us 86,000 rands. This 86,000 rands is the amount that would have covered our fixed cost then after we made a profit already. Remember, I said that contribution is the portion of your sales that is used to cover the fixed cost. Then after, this will be the contribution if they are operating and selling both products. Then after, now we calculate the new contribution, meaning the new contribution is the contribution after they discontinue with the sale of the Wilson product. The contribution per unit, which is I'm referring to the product Barbolat. We had that contribution for this product and we calculated that, and it was 95 rand. If I still remember, we had that contribution which was 495 minus 400. It was contribution of 95 rands. So now we say that contribution is per unit. We need it in total. Then we term that with the expected sales or the budgeted sales. Our budgeted sales were said to be 600 units because they said when the company, or if the company discontinue, therefore now they will sell up to 600 units of the remaining product, which is product Barbolat. There was the sales that were expected to increase not by 600, they are increasing by 200 from 400 to 600. Don't forget that is 400 plus 200 is equal to an increase to 600. So now we multiply that by 6 to determine how much will be the contribution. Therefore now it will be 95 times this by 600, and this will give us 57,000 rands. This is the portion that will contribute to our fixed cost. So now we get to our total contribution for product Barbarot. Total contribution. So now we can see that the company, when they are selling both products, they will be making more marginal profit, which is 86,000. But when they are selling only one product, they will be making less marginal profit, meaning now the difference on that will be 86,000. So the company will be reducing their marginal profit by 29,000 rands. So now, surely from this perspective, the company should not discontinue with the product, with the discontinuation, or should not continue with their decision or their pending decision, which is aiming to discontinue the sale of the Wilson product. So that is a no-no, because the profit is very high in comparison with this marginal profit, and they will be reducing their contribution by 29,000 rands. And besides, when the company discontinue with this product, it's likely that they will have to fire some employees, and firing some employees might lead to the remaining employees not being morally comfortable, because they might think that they'll also be comfortable. They will also be fired. So that will not be good from an employee perspective. And at the same time, it's likely that customers will not be happy and they will opt to buy a similar product from the competitor, which might reduce also the reputation of the company. Perhaps some customers might think that the business is perhaps going liquidated, the reason why they are discontinuing with the sale of this product. And customers can end up perhaps completely assuming that the company is about to fail, and they change and they buy from the competitor, and the company can end up deteriorating or decreasing in terms of sales more than that they expected. So that is just the summary. Otherwise, for a solution, you have a solution, you will see all the theory behind. Very important, analyze the financial side and the non-financial side in the decision as to whether the management should discontinue or continue with their decision. So now we proceed on that note. We go to requirement number B. We are done with the requirement number A, and requirement number B is directing us to prepare the reconciliation. So now requirement number B is for the gymnastic division, where now we are dealing with the analysis of the variance. So now in analyzing the variance, we need to look at the budgeted and the actual information. We need to look at the budgeted and the actual information. And this is the gymnastic division. So now I will go to the gymnastic division because the question directs me to come to this division. So now since the gymnastic division uses a highly automated manufacturing process with no human intervention, and if there's no human intervention, and we know in the question that we'll be analyzing or reconciling the variance, meaning the labor variance will not be in place. There will be no labor rate, there will be no labor efficiency because there's no human intervention to produce a unique gymnastic equipment. This division makes use of a direct costing system. So the company is making use of the direct costing system. The standard cost for 1 unit of its product, which is the gym indoor, for the month of June 2016 was as follows. So now the provided information, which is below, is for 1 unit. And it says the standard cost per unit of product gym indoor is provided to us. We have 3 materials, and we know that material is a variable cost. Direct material is a variable cost. So meaning now this material X, Y, Z with 4 kgs, 2 kgs, and 2 kgs per unit, and 30 rand per kg, and 16 rand per kg, and 8 rand per kg, which was 4 kgs times 2 kgs times and 2 kgs times, that will give us the cost per unit. That will give us the cost of material per unit. This is cost per unit. In fact, they already said that it is per unit. I just want to make sure that is the cost per unit. This is the kgs that are required per unit, kgs required per unit, and kgs required per unit. And this is the cost per kg. This is cost per kg. And if you say kgs times by cost per kg, it gives us the price of 120. Just to calculate one to affirm that. So it will be 4 times by 30, it will give us 120. So this is where the 120, 32, and the 16 is coming from. And the total cost of production is 168, which is 168 rands. And they say to us that the budgeted fixed production overheads is 725,000 rands. In order to arrive at the budgeted selling price per unit, the gym indoor, the gymnastic division applies a 80% markup on the standard cost. Remember, our standard cost is 168 rand. This is our standard cost per unit. So now it says that the policy of the company, it is to add 80% in that cost price so that they get to their selling price. So meaning the budgeted selling price will be that times by 1.8. Remember, 1.8, I use too much of the decimal sometimes. 1.8, it is 180%. 180 divided by 100. Because if the company is adding 80%, therefore now it will be 100 plus 80%. Therefore now this will give us 180%. And 180% is 180, divide that by 100. It will give you 1.8. So please bear with me. I normally use decimals most of the times when it comes to the percentages. So this will be times that by 1.8. So I have added 80% already. So now times that by 168. It will give me the budgeted selling price as 310.40 rand. So this will be the budgeted selling price. Let me go to my other workings. This will be working number 5, and I'm calculating the budgeted selling price. Budgeted selling price, and the budgeted selling price will be 168. This amount is given, times this by 1.8, which is also given, and it gives me 302.40 rand. So now this is the selling price that is budgeted. And I think my working numbering is consistent. Yes, previously I had my working number 4. So this is working number 5. Now we have calculated the budgeted selling price. Then let me read further to see what else is needed. Then it says that the division budgeted to manufacture and sell 10,000 units of gym indoor during June 2015. So these are the budgeted sales for this company. There was no opening or closing inventory for the indoor, and that is a very good information that we need to. Then now let us go to the actual results, because we are calculating variance, so we need to know how much was budgeted in comparison with the actual information. It says the actual results for product gym indoor for June 2015 were as follows. We are provided with the materials, once again, material X, Y, and Z. Obviously, these are the material the company is using to manufacture one unit of a product. So now they give us material purchases and issued to production, meaning all the material that was purchased was all used in the production process or was all issued in the production process, meaning now there will be no closing inventory of raw material once again. Although previously they said there will be no opening or closing inventory of the product indoor. This was product indoor. So now a product is different from material, and material is different from work in process. In the case where the company manufactures a product, where they buy material, process that becomes a finished product, there is normally three types of inventory. Inventory of raw material, inventory of work in process, and inventory of finished goods. So now if all the material that was purchased was all issued into the production department, meaning now there was no closing inventory of raw material. As they said also, there was no closing inventory also of the finished goods. So now they give us total kgs, and they gave us a total cost of 1,260,000 and 288,000 and 165,000. Take note of that. In the previous scenario, meaning under the budgeted information, they gave us the kgs, they gave us the cost per kg, and they gave us the cost per unit. But now, in this case, they are giving us the total. And if you look at the total is 1,260,000. So now, meaning we have to have a column here which is cost per kg. Cost per kg. Meaning now we have to say the cost, which is the total cost, divided by the kgs, we get to the cost per kg. Then after now, that will be 1,260,000. Divide this by 40,000. It gives me 31.50 rand, meaning cost per kg for material X, it was 31.50 rand. Then I calculate the cost per kg, which is 288,000 total cost of material purchased. Divide this by 18,000 kgs. Divide this by 18,000 kgs. It gives me 16 rand per unit. So this will be, 16 rand per kg. Then for the last one, it will be 165,000. Divide this by 22,000. It gives me 7 rand 50 cents. So for the last one, it will be 7 rand 50 cents. So now these are the costs per kg. And the reason why I'm doing this is because in the standard information, I am provided with the cost per kg. So now when I'm doing my variance analysis, I want to use my cost per kg. At the same time, if I wanted, I could have used my cost per unit in the analysis of the variance, where I can take the cost price per unit, and here that will mean now for me to get the cost price per unit, I need to know the number of units that were sold. Then I will show you that immediately when we get to that. It says now actual production and sales. So now meaning the company expects to manufacture 10,200 units. So now if we want, we can say 1 million, which is the cost of 1 million here, 1,260,000 divided by 10,200, it gives me 123. So if I want, I can use my cost per unit as 123.53. Then at the same time, I can say 288,000 divided by 10,200 to get to the cost per unit. This will give me cost per unit of 28 rand 24 cents. Then after 165,000 divided by 10,200, this will give me 16 rand 18 cents. So now if I'm using the cost per unit, I can compare this with the standard cost per unit of 120 rand, meaning with this column. So your variance can be analyzed using the cost per kg. I'm referring to the price now, the material price variance. I can use the cost per kg or I can use the cost per unit. But when I'm using the cost per kg, I will multiply by the actual kg that we purchased. But when I'm using the cost per unit, I will multiply by the actual units that were manufactured and sold. So now let me proceed on that same note. Actual selling price per unit is 305 rands, and we have calculated our budgeted selling price, and the budgeted selling price was 302 rand 40 cents. So now we can see that there is already a variance regarding this question. Then we have the total fixed production overheads, which is 778,000, of which previously we had budgeted fixed cost, which was 725,000. So now we can see that there will be unfavorable variance, which we had 725,000 minus 778,000. It gives me negative 53,000. So we can already say that with regard to the budgeted production fixed, we have unfavorable variance. So now from here, we can do the reconciliation now. In doing the reconciliation, we need to start with the budgeted information, where we are reconciling budgeted with the actual. So now there will be limited space, I know, but I'll have to go to the next page. So now I'm responding to a response number. Let me check if this is requirement number B or number C. Okay, it is number B. I'm responding to requirement number B. So now we are reconciling here. So we start with the budgeted profit. My budgeted profit will be made of sales, which is budgeted sales, which is 302 rand 40 cents, times this by my budgeted sales, which is 10,000 units. Budgeted sales is 10,000 units. Let me just go and check on that. We budgeted to manufacture 10,000 units. There we had 10,000 units. There was 10,000 units. And remember, this is the budgeted information, which is the standard cost information. So now that was under budgeted. And remember, this is actual information for the same division. So now we start with the budgeted because we are reconciling budget with the actual. So we have our budgeted sales, which is 10,000 times by 302 rand 40 cents. This gives me 3,024,000. 3,024,000. This will be the budgeted sales. Then after the budgeted sales, I have to subtract marginal cost or variable cost. The reason why I'm saying marginal cost is because I will only take into account the variable cost. And I know that my variable cost is 168 rand. This is the only cost that I have, 168 rand. That is my variable cost. And I'm planning or budgeting to manufacture 10,000 units. Therefore, cost per unit times by the number of units that I expect to manufacture or budget to manufacture. So now it will be 168 rand times that by 10,000 units. This will give me my marginal cost. 168 times this by 10,000. And I'm saying marginal cost because this is only the variable cost that I've taken into account. It will be 1,680,000 rands. Then after I have to less my fixed cost, which is my budgeted fixed cost. And my fixed cost was 725,000 rands budgeted. So now with all of that, I can get to my budgeted profit. I can get to my budgeted profit, which is 3,024,000 minus 1,680,000 minus 725,000, and this gives me budgeted profit of 619,000 rands. Then now after I have calculated that budgeted profit, I need to take now into account my variance. And the first variance that I need to add, it will be my sales volume variance. My sales volume variance. My sales volume variance. And my sales volume variance will be calculated. I'll just show all the calculations in here as opposed to calculate it independently. So now my sales volume variance will be my actual sales. And actual sales are 10,200 minus budgeted sales of 10,000. And term this by the standard selling price, or in fact term this by the contribution. Term this by the contribution. Remember, my contribution will be 302 rand 40 cents minus 168 rand. I will do this calculation again separately. So now we multiply our sales volume by the contribution, and I have to calculate my contribution here under number 5. Let me calculate my contribution. Remember, contribution is equal to sales per unit minus variable cost. Nothing changes. Minus variable cost. Minus variable cost. And my sales per unit are 302 rand 40 cents. My budgeted sales per unit. My variable cost is 168. Remember, my variable cost is the cost of material per unit, which is that 168, because we know that material is variable. It's a variable cost. So there's nothing else to be told. The minute you see that, you know that material is a variable cost. So now that will be 302 rand 40 cents minus 168. This gives me 134 and 40 cents. So now this will be my contribution per unit. This will be my contribution per unit. So now I will effect this in my calculation, which is the same calculation that I've done here. If you want, you can show it like this, but due to space, I just want to say 134 and 40 cents. Remember, my actual sales were given to me as 10,200. The actual sales were 10,200. Here we had our actual sales, 10,200. And budgeted sales were 10,000. We budgeted to sell 10,000 units. Here was our budgeted sales. So that's where the figures are coming from. And we multiply our sales volume by the contribution per unit. So now we say contribution per unit times by 200. Well, the difference is 200 between the two. So this gives me 26,880. and this variance is favorable. Remember, this will be 10,200 minus 10,000. That gives us 10,200. 10,200 minus 10,000. That gives me 200. Times this by 134.40. So that's why I just shortcut it, because the difference is 200. Then after we get to what we call standard profit. We get to what we call standard profit. Now after my standard profit, I'll have to calculate my sales price variance. I'll calculate my sales price variance. Sales price variance. Remember, I started with the volume, then after I go to the price. Sales price variance. My sales price variance, I need to know how much is the actual selling price. And my actual selling price was 305, and my budgeted selling price was 302 rand 40 cents. This will also be favorable. Let us confirm the figures. They just already in my mind. The company actually sold 1 unit. Actual selling price per unit is 305. So we compare the actual selling price with the budgeted selling price. Budgeted selling price is 302.40. So now you'll have to make a reference for that 302.40, because 302.40 was coming from another calculation which we have done under number 5. So now you'll have to show the examiner that this is coming from working number 5 in terms of this 302.40. Term this by actual sales, which is 10,200. Actual sales is 10,200. So we have 305 minus 302.40, and we term this by 10,200, which is actual sales. And by doing so, it will give us a variance of 26,520, and this variance is also a favorable variance. Then after now we go to material. We are done with the sales. We have done the volume, we have done the price. Then after now we go to material price variance. If you want, you can underline the headings of the variance so that you know this is the sales price variance, and you know that this was a sales volume variance. Standard profit, I don't know why I did not add anything under standard profit. My standard profit is this figure plus the sales volume. That should give me my standard profit. I thought I've written it. 619,000 plus 26,880. This gives me the standard profit of 645,880. That is the standard profit. You just add the two, then it gives you equals that. That is called standard profit, before you take into account all other variance. Then after now I do my material price variance. My material price variance. Remember, I had 3 materials here. Material X, material Y, and material Z. So for all of them, I need to know the standard price. Standard price, remember I said if you want, you can use per unit or you can use per kg. But I want to use the per kg one that I've converted. My standard material per kg, standard material per kg is 30 rand 16 and 8. 30, 16 and 8. It is 30, 16 and 8. Minus, minus, minus. Then now I'm looking for the actual. Here I had 31.50. Here I had 16. Here I had 7 rand 50 cents. Let me just confirm that perhaps you forgot. I hope I still have my workings. Remember, we went to the actual information and we said the cost that we have, which is the cost of 1 million. We said this divide by 40,000 kgs, and it gave us the 31 rand 50 cents. That's where that is coming from. Then after we said here, divide this by 18,000 kgs. And dividing by kgs from a cost, you get a cost per kg, which is that 16 rand. Then after here, we said divide by the total kgs of 22,000, and it gave us that 7 rand 50 cents, which is the actual cost per kg. So now we have used that, then we multiply by the actual quantities purchased, which is 40,000, times this by 22,000, times this by 18,000 kgs. These are the kgs that were actually purchased, not used, just purchased, which is 40,000, 18 and 22. Okay, it's 18 and 20, not 22 and 18. It's 40,000, 18 and 22. Yes, 18,000, yes, 22,000 kgs. So now this will give us our variance either favorable or unfavorable. So it will be 30 minus 31.50, which is 150 times by 40,000. This variance will be unfavorable at the value of 60,000. Unfavorable at the value of 60,000. If it's unfavorable, we just say A representing adverse. There will be nothing here because 16 minus 16 is 0. Then we have 8 minus 7.5. And we times this by 22,000. And this variance is favorable at the value of 11,000. And it's a favorable variance. Then after you draw your line, whenever you add more than one figure, even if you add just one figure, minus 60,000, then we get to an unfavorable total variance of 49,000. This will be negative adverse variance. So that was material price variance. So now we go to material yield variance. We go to material yield variance. Material yield is made of material mix and material, or we go to material usage, not yield. Material usage. Material usage is made of material mix. Is made of material mix and material yield. And they have already given us these two variants, which is mix and yield. Sum of the two is just material usage. So we go to the variance that they provided to us already in the answer or in the question. They said that we needn't to calculate any of the material mix variance or material yield variance, which in total is material usage, because material mix variance in total was 16,000 favorable. So we write material mix as 16,000, which is favorable. And they said material yield total was 33,600. Combined material yield 33,600 favorable again. 33,600 also favorable, and the total will also be favorable. Then after now we have 16,000 plus 33,600, which is 49,600 rands. 49,600 of a favorable variance. So now we have covered, remember there is no labor variance, there is no overheads variance, because there was no information provided regarding that. Besides, regarding the labor, they said this department is very automated, is using a well-automated machine. So now there is no labor intervention involved. So now the last variance that we need to account for is the fixed overhead variance. Fixed overhead variance, and the fixed overhead expenditure variance. Expenditure variance is budgeted of 725,000. minus actual of 778,000. And we have already seen this before. It is negative 53,000. 725,000 minus 728,000 minus 778,000, and this gives us an adverse variance of 53,000 rands. That will be our budgeted fixed overhead expenditure variance, negative 53,000 rands. So now when we start calculating from here to the end, this should give us the actual profit. 645,880 plus 26,520 minus 49,000, 26,520 minus 49,000 plus 49,600 minus 53,000. It gives me a total of 620,000. I get an amount of 620,000. This should be the actual profit. This should be the actual profit. So now we have calculated the budgeted profit as 690,000. Then we have reconciled up to the actual profit. So now we need to calculate the actual profit so that it gives us the same amount of 620,000. So now let me calculate now the actual profit so that it gives me the same 620,000. If it does not give me that, then there is a problem. Or either I would have calculated something wrong somewhere. So now I'm calculating my actual profit. My actual profit will be made of sales. And my selling price is 305 times this by the 10,200 units that were manufactured. It will be 305 selling price times by 10,200. Sorry. That gives me the total of 3,110,000. 3 million or 31,110 or 3,111,000. 3,111,000. That will be the selling price. Remember, the actual selling price was 305 and the actual units that were sold was 10,200. This is and this one. We multiply the actual with the actual in this case because we are doing actual profit. Then after we say less variable, then we say less variable cost. Then now we have to go and look at how much would have been our variable cost in this case. Our variable cost will obviously be in total because they've already given us the total. Our variable cost will be the sum of those three costs in total already because they've given them to us. So what we do, we just say 1,260,000 plus 288,000 plus 165,000, and this gives me 1,713,000. It is 1,713,000 rands. That is my variable cost. 1,713,000 rands. So this will be a negative. Then after I also have to say less fixed cost, which is the actual fixed cost. My actual fixed cost is 788,000 rands. So now when I say 3,111,000 minus 1,713,000 minus 778,000, 778,000, not 788,000, 778,000 it gives me the actual profit as 620,000. 620,000 rands. So you can see that our actual profit is 620 and our reconciled profit from budgeted is 620 because we're reconciling our budgeted profit, and the reason why these two are different is because of the variance that are in between. If the budgeted was the same as actual, therefore now the profit would have been exactly the same. So now we have analyzed the variance and we got to 620, which is the actual profit, and we tested if is this really the actual profit, and there we go, it gives us the same actual profit. That is how you do the reconciliation from the budgeted to the actual profit. Now just want to bring your attention to something a bit important to know, because sometimes you might be given the limited information. So now I said to you that if you want, you can analyze the material price variance using the price, not the cost. So now if we will have to use the price, I say that we'll have to say, just want to bring this on top so that we can, okay, I cannot see both of them. Remember, under the budgeted, before I do that, under the budgeted, we are provided with the cost per unit. And our cost per unit is 120, 32, and 16. So we have 120, 32, and 16. I want to bring them here. This is budgeted 120, 32, and 16, which is the cost per unit. Now, which is the budgeted cost per unit. Budgeted cost per unit. Ignore my abbreviation. I'm just writing it for sake of space. That is my budgeted cost per unit or standard cost per unit. So now I can compare this with the actual. And when I'm doing my actual, I said we can divide this by 10,200 units because these are the units. So I need my cost per unit. Therefore, I can also say divide here by 10,200 and here divide by 10,200. And if we do that, it will mean we have to say 1,260,000 divide by 10,200, and it gives me that 123. And I say minus 120, it gives me this figure, and I multiply this by 10,200 units because I'm using the cost per unit. And if you see that, it will give you 36,000. So now when we do the cost per unit, it should give us 36,000 rands. Then after, we will have to say 288,000 divide this by 10,200, and we get to that, we say minus 32, and we multiply this by 10,200, and we can see that it gives us a variance of 38,400. Then after, we'll have to say again 165,000 divide this by 10,200 equal, then we say minus 16, then we say times this by 10,200. This will give us 1,800. So now if you want, you could have used the per unit, but the problem with the per unit, the fact that it gives a different answer than the one when you use the kgs, which for some strange reasons I don't understand why that is the case. However, we can use that information per unit, where we take the cost per unit, we compare with the actual per unit, then we multiply by the actual units manufactured. But for some reasons, it gives me completely different figures. But for this one, it is the same in the solution. For this one and for this one, it's not the same. But this is still a correct method to calculate the material price. Remember, I'm referring now to the material price because I'm dealing with the price of the material here. So I'm bringing this to attention so that you can apply it in the exam despite the difference of my calculation with the solution in the question bank. But the correctness of this is not questionable. So now we proceed to this last requirement. And the last requirement is in the last division. So now we have covered number B, and we have seen that our variance is balancing. And I said that the reason why the variance are different, obviously because we would have bought material at a higher price. We did perhaps not check for a better supplier at the lower price. And this one, that will mean we used more than we supposed to have used in terms of material mix. So now you can go through that. It's not a transmesh for you to go through such information. Now we go to number D, which is the last requirement. Now, number D says that calculate the total budgeted contribution of the Rapid Division for July 2015 based on the optimum product mix. So now, whenever they speak of the optimum product mix, it means there must have been a limiting factor in the Rapid Division, meaning something that limits the division not to produce all the units that they want to manufacture. Let us go and read, and we'll see what perhaps will be this factor that is limiting the Rapid Division not to manufacture up to their target capacity. So now it says the Rapid Division. The Rapid Division uses a unique machine that stretches the leather for the different types of leather rapid balls they sell. The Rapid Division is planning their production levels for July 2015 for the different types of rapid balls. The following information is provided relating to the sales forecast for the month of July in the year 2015. Then now this is the forecast or the estimate or the budgeted information for the month of July in the year 2015. We are given three products: Extreme Ball, Avjo Ball, and Intro Ball. There are three balls that this company is manufacturing. The selling price per ball is $675, $400, and $280 respectively. We have our variable cost per ball, which is $260, $250, and $120 respectively. We have machine minutes required per ball. Take note, not machine hours, machine minutes. Therefore, this is 30 minutes, this is 18 minutes, this is 15 minutes. And if we preferable convert your minutes into hours. However, you can stick with the minutes, but we have to convert everything into minutes that relates to the minutes. So now converting this, it will be 30 divided by 60. This will be 0.5 hours. 18 divided by 60, just to convert it now. 18 divided by 60 will give us 0.3 hours. Then 15 divided by 60 will give us 0.25 hours. 15 divided by 60 is equal to 0.25 hours. So now the minutes now have been converted into hours. I prefer that approach. Then they give us the sales demand for the balls, which is 200, 1,800 units for Extreme, Avjo, and Intro respectively. It is not possible to increase the machine hours. Take note, it is not possible to increase the machine hours of the Rapid Division leather stretch machine beyond 540 operating hours per month in the short term. So now meaning we are limited not to manufacture above 510, or we are limited not to spend or not to use more than 540 machine hours in the short run, or per month, in other words. Now, meaning we are limited only to the 540 machine hours. Then now the question is, do we need all these hours? We don't know. We need to test based on the number of units that each department, in fact each product, wants to manufacture, and to say how many hours are required to manufacture the number of units that we target to manufacture, and how many hours are required there, and how many hours are required to manufacture the 800 units. Then the minute we know the number of hours, therefore now we can compare the required hours to manufacture the sales demand with the limited hours of 540. Then if there's a shortfall, then after now we have to do the ranking and we do the allocation of the limiting factor which is the hours according to the rankings using the contribution that we would have calculated. So now let us first calculate the required hours. Always that will be the starting point when you deal with this question. So now we are on the last requirement, which is requirement number D. This will be requirement number D. So now first thing that we do here is to calculate what is required. Here we are calculating required machine hours. Why are we calculating required machine hours? Because the company is limited not to exceed 540 hours per month. Then the question is, how many hours are we required to spend to produce all the three products we want to produce? So now we have Extreme wants to manufacture a certain number of units, and that certain number of units is 200 units, and the time it takes to complete 1 unit of Extreme is 0.5, which is 30 minutes, half an hour. So now we say 200 units that they want to manufacture, times this by 30 minutes, divide by 60 minutes in an hour. Then this will give us 100 hours. This will give us 100 hours. So now it means Extreme requires 100 machine hours to manufacture the 200 units. Then the second product is Avjo, which is Avjo ball. Avjo wants to manufacture 1000 units at 0.3 hours, which is 18 minutes over 60, where we converted that as 0.3 hours. I just want to show all the calculations here so that I don't make the reference. So it was 18 out of 60 minutes in an hour that they spend to complete one ball. So 80 minutes to complete 1 unit, divide by 16 or 60 minutes in 1 hour, times this by 1000 will give us 300 hours that are required to manufacture the 1000 balls. So now it will be 300 hours required. Then we go to Intro. Intro wants to manufacture, or we want to manufacture 800 units of Intro, which it takes 15 minutes to complete 1 unit. So now we say if we want to manufacture 800 and it takes only 15 minutes, which is 15 over 60, therefore now how many hours do we need to complete this 800 units? 800 times by 0.25 will give us 200 hours. So now it means we require 200 hours to complete the 800 units. So now let us calculate the total required. It will be 600 will be the total of the hours that are required. So now required hours is 600 hours. So now meaning this company requires 600 total machine hours to manufacture all the units that they manufacture for the 3 products that they have. But how many hours are available? Let us check. How many hours are available? Available machine hours is 540. Our available machine hours is 540. So now we need 600 hours. What is available is 540. Is there a shortage? Yes, there is a shortage. And the shortage will be 60 hours. And that shortage will be called a shortfall. So now if there is a shortfall, we need now to rank our products so that the products that makes more profit per limiting factor. Remember, our limiting factor is machine hours, meaning the product that makes more profit per machine hour is the one that will be ranked first. and the one that is making less profit will be ranked second and third. So now we need to calculate our contribution now per unit. So we need to calculate our contribution per unit. It's always the way we are using the contribution. We are using the contribution to do the ranking. Contribution per unit, because contribution will tell us which of the product is making more profit based on the factor that is limited, meaning based on the machine hours. So now we have these three products, which is Extreme, Avjo, and Intro. Then you can draw the lines. I normally don't draw the lines in between. I just decided to draw them now for no reasons. So now we start with the sales per unit. Our selling price per unit, we had 600 and something in one of the products. Yes, 675, 400, and 280. 675, we have 400, and we have 280 rands. Then we say less our variable cost. We had our variable cost. This question is very easy. They already provided us with the variable cost 260, 250, and 120. We have 260, 250, and 120. So now this is our variable cost. Hence I said questions of this nature are normally easy to tackle. Now we get to our contribution per unit. We have our contribution per unit, and our contribution per unit will be 675 minus 400. I think it's 400, or it's minus 260. We have 675 minus 260, which gives me 415. Let me confirm if my variable costs are 260. Okay, yes, 260. Therefore now we have 675 minus 260, which is a total of 415. So 415 will be the contribution. Then for the second product, it will be 400 minus 250. Then this gives me 150. Then after we have 280 minus 120, and it gives me 160 rands. So now this is my contribution per unit. And if I look at my contribution per unit, product Extreme is making a more contribution, meaning is making a higher contribution than all other products. This is higher, this is second, and this would be third. I'm using per unit. This is not how we should do the ranking, but I'm just ranking from a per unit perspective so that we can see the importance of ranking according to the limiting factor. So now we have to divide by the limiting factor per unit, which is machine hours per unit. If you want, you can say limiting factor per unit, because we already know that the limiting factor is machine hours. So now we divide by machine hours per unit. Machine hours per unit. My machine hours per unit, we have calculated this to be 0 point something. It was 0.5, which is 30 minutes. Divide by machine hours per unit. This was 0.3 and this was 0.25. Remember, I divided the minutes with the minutes in an hour, where I said 30 divided by 60, just to remind you. And second one was 18 divided by 60. It gave me 0.3. third one was 15 divided by 60. It gave me 0.25, which is machine hours per unit. These are the machine hours it takes to complete 1 unit. And remember, I'm dividing here. I'm dividing here and I'm dividing here, so that I can get to know how much is the contribution per machine hour, meaning contribution per limiting factor, so that I know which of the product is making higher profit per machine hour, which is our limiting factor, so that the product that makes more profit per machine hour, we can manufacture more of that and less of the one that makes less profit per our limiting factor, because we are limited not to manufacture up to our capacity based on the limitation of machine hours. So we say 415 divided by 0.5, then this gives me 830. Then after we have 150 divided by 0.3, and this gives me 500. Still, product number 1 is still making higher profit so far. Then we have 160 divided by 0.25, then this gives me 640. So now we can see that things are turning around. Previously, we could have ranked this as 1 and this one as 2, or still the same. We still have 1, 2, and 3, but remember, we're not ranking using the per unit. So now we have to do our rankings from here. Therefore, now this will be our first contribution per machine hour, or yes, contribution per limiting factor. Then after, now we do our rankings. Just change the color. We do our rankings. We rank according to the highest. This is number 1, this is number 2, this will be number 3. So it is 1, 3, and 2. Ranking according to the highest. Then now, after we have done the ranking, we start doing the allocation. Then after we are done with the ranking, we start doing the allocation now. We allocate according to our ranking. This will be allocated first, allocated second, and the remainder will be left for the last product. Therefore, now we say allocation, where we allocate the limited resource, or the limitation of machine hours. Allocation of machine hours. Then city, how much is available? Available for all products. The one that is available for all products is 540. These are the only hours that are available. We cannot exceed that. You write exactly as you are given from the question as the limiting factor. Then city allocation, now we allocate that. Allocation to the first product, which is extreme. Then we say now, how many hours does product extreme require? Product extreme requires 100 hours. Do we have 100 hours available? Yes, we still have 540 available. So now we can say we will take into account all the hours that are available for product extreme. This is in hours, this is in hours. So now we'll have the remainder. The remainder will be 440 hours. Then after, now we say available. This will be available for intro and avjo. Meaning these remaining hours, they are available for the rest of the products, which is intro. And I'm saying intro because intro is ranked second. Then after avjo, meaning the remainder will be left for avjo. So the remainder of the hours, they are available for the remaining 2 products. Therefore, now we allocate based on our ranking. The second product, rank number 2, is intro. So now we do allocation for intro. Then this will be allocation for intro, which is our product. How many hours does product intro require? Product intro requires 200 hours. How many hours are available now? We have 440. So now, if there is more available, we can take all that intro requires. Then we say minus 200. And what will be left will be 240 hours available. And the hours available, they are available for AVJO. So we say available and allocated. Because the available ones, they are also allocated to the last product. Available and allocated. Available and allocated to AVJO. Because these available ones will be allocated to AVJO. Then the question is, how many hours does the product AVJO require? Product AVJO requires 300 hours for them to manufacture 1,000 units. Then now the question is, how many hours are available? Only 240. How many hours are required? 300. Therefore now the question is, how many units now can be manufactured out of the 240 hours that are available? So now we say units to be manufactured. We will need to know how many units now will be or can be manufactured out of the 240 units in 240 hours. Then we say units to be produced for product AVJO. How many units can they produce out of the 240? It will be 240 hours. Divide that by the number of hours it takes to complete 1 unit. And we said 18 divided by 60, it will be 0.3. That was 0.3 for AVJO. So now we want to know how many products. You divide by the limiting factor per unit to get to the units that are to be manufactured. So we divide that by 0.3 hours per unit, then that will give us the number of units. So we say 240 divided by 0.3, it is 800 units. So now meaning they cannot be able to produce the 1,000 units that they targeted to produce. So now they can only produce 800 because of the limiting factor. Now that we have covered that, then now we have to, okay, let me check if is there anything that we still need to take into consideration. So now it is very important to note the rankings for this product. So now we have to split our demand after we are done with this. We have to split our demand, and we said that the company will have a contribution. Where we said now it will be allowed only to produce. Let me just change the color so that we tap on this. The contribution for the company is 410, 15, 150, and it will be 160. So we have realized that after we have done the allocation, which is the allocation of the resources, product extreme will manufacture all their products, and product intro will manufacture all their products. But as for AVJO, they can only manufacture 800 units. Now from here, we need to split now, or we need to multiply the contribution by the demand, which is the number of units that will be manufacturing. Then after now, we have to calculate our contribution. And we say contribution, and our contribution will be calculated, or let me just take it as it is, 415, 150 first, and 160. Then I will say demand, meaning units that will be manufactured. Here we'll manufacture all the units that we intended to manufacture. And I want to check the number of units that we intended to manufacture. We intended to manufacture 200. This will be 800, remember, no longer 1,000. The company can no longer produce that 1,000. 200, 800, and 800. So now we multiply that by 200 because this will be manufactured. They will only manufacture 800, and here they will manufacture all their 800. So if we multiply this two, this will give us the contribution that will maximize the profit. The contribution that will maximize the profit. And the contribution that will maximize the profit will be 800 times that by 150. Meaning contribution that will maximize the profit will be 120,000 for this one. Then we'll have 800 times that by 160. Contribution that will maximize the profit will be 128,000 rands. And contribution that will maximize the profit will be 200 times that by 415. Therefore now it will give us 810, or in fact is 83,000. So this is the contribution that will maximize the profit. So now we calculate the total contribution now. We calculate the total contribution. Oh, I have very limited space. Let me just say total contribution here at the bottom. Total contribution. And my total contribution will be the sum of the three, which will be 83,000 plus 120,000 plus 128,000. Then it gives me 331,000. 331,000. Please write this in the right space. However, at the end of the day, as long as you have seen it, even if you would have taken this portion and you record it here just below here, there will still be nothing wrong with that. So because we have now answered all the questions, therefore now I can say yes, thank you guys. Make sure that you master the calculation, more especially in responding to the question, because this is the gist of what we are required. We're required to calculate the contribution that will maximize the profit. So now this will be the contribution that will be used to maximize the profit. So now with all of that, guys, I will request that as I will be uploading this on YouTube, if you find any perhaps errors or mistakes along the way, because I do this for long hours and sometimes I will not notice that I've made a mistake, please write or send your comments via the YouTube. Then I'll respond on that. Or if you need any clarity, then you can contact me via that line. Then we can speak and I'll respond to your question. Though I don't check my YouTube regularly on a daily basis, but I do check it maybe on every second day or once a day. With all of that, guys, thank you. I would like to get your comments at the end of the day. God bless you. Bye.